$1.7 billion. That's Kim Kardashian's valuation of her net worth as stated by Forbes. Today, I'm going to break down the disruptive billion-dollar empire building tactic that Kim K is using, how then also you can apply this cheat code to scale your own multifamily apartment business to new heights. And if you haven't been keeping up with the Kardashians, you may be surprised to know that this isn't coming from a reality show. In fact, this comes from her business smarts that got her to this point. These moves are moves that you can make as well. You might be wondering, who am I to teach you about multifamily empire building? Well, I'm Palmy Kitti, the other half of the Kitti Sisters, with over $300 million in multifamily apartment portfolio. We own these type of assets that are income-producing properties. Now that you know that you're in good hands, let's start with the first strategy, tribal marketing theory. This strategy, it reminds me of an episode of The Simpsons, where Homer joins a secret stone cutter society, this group with its own rules, rituals, and benefits. It actually gave Homer, someone who always felt like he was an outsider, a sense of belonging and purpose. Kim K created her own tribe by centering it around beauty, self-expression, and entrepreneurship. Her fans feel empowered and glamorous by aligning with her brands, Skims, KKW brand, and her personal brand. It's more about just product. It's about shared purpose around confidence, body positivity, and reshaping beauty standards. To build your own tribe, I would say to emphasize doing these things. Number one, identify shared values and purpose. You need to identify your investor's outcome, truly understands the ideal investor. You need to pinpoint their specific desires. Avoid vague or generic description. How do you achieve this at a detailed level? Consider this approach. Your ideal investor might be very well a version of yourself from 5 to 10 years ago. Reflect on your desires, where you were at the time. Alternatively, you can also engage individuals who embody your ideal investor's profile. Ask them what are their goals and aspirations. What will you help them achieve? Number two, define a clear tribe identity. For Kim K, her tribes aren't just fans. They're individuals who see themselves as part of the modern beauty movement, one that infuses fashion, entrepreneurship, and personal empowerment. The key takeaway here is that you need to build your bond with your investors that goes beyond IRR, cash flow, ARR, and multiples. Sure, those metrics are important, but deep down, the investors really want to feel they are part of something that's a bigger movement. For example, breaking free of the golden handcuff of financial limitations. Number three, create a common language or symbol. Kim K introduced visual language in her products that identify her tribes, something like Skims Body or KKP Contour. These are the short form that her tribe used as a collective pursuit of positive body images, flawless beauty routine. For us, the Kitti Sisters, our tribe are made of those individuals who seek 1,000 times better investments. They crave freedom and their ability to make their own choices, and they refuse to hand over the most important aspect of their lives to faceless fund managers. They're driven by a desire to control and empower their own financial future. Number four, offer exclusive experiences or benefits. This is where you can elevate your investors' experience by offering personalized training, challenges, and early access to investment opportunities, making them feel like they're part of an exclusive high-level group. Even though now you have steps to build your tribe, all this doesn't matter. You need to identify the gap in the marketplace. Identify the underserved segment of the market and cater directly to their needs. It's all about understanding what your investors are really looking for. And this is where the disruptive, innovative blueprint comes into play. It's all about understanding what your investors are looking for. For us, this is where we zig when others zag. When we got into multifamily apartments, and even until recently, we kept hearing mentors say, invest in C-class properties. But take our investors, for example. Many of them are scarred from investing in C-class properties that couldn't hit the projected returns. Why? Unexpected deferred maintenance, high eviction rates, high delinquency, difficulty increasing income, tougher management, and harder eviction processes. All these challenges turn promising deals into a stressful nightmare. And for us, after experiencing those sleepless nights operating C-class properties, we were like, nope, never again. We shifted our focus to acquiring A-class assets with stability, growth, and peace of mind. In return, we've been able to deliver solid returns our investors were hoping for without all the headaches. That's exactly what Kim K did. With KKW Beauty, she simplified makeup with accessible contouring kits, making professional-level contouring easy for everyday consumer, especially those who felt ignored by traditional brands. When you truly understand your investors' needs, it's like you can see directly into their minds. And that's when you are able to unlock the potential to raise even more money. Well, you can join our community where we help you learn the strategies, attract, and raise money from your ideal investors. Now that you understand what your investors are looking for, it's time to leverage other people's money, OPM principle. Once you master this, you'll be able to make bigger moves and bigger dreams. When you leverage OPM, you have no ceiling. You must hear this fascinating fact. Sky Partners, the private equity firm co-founded by Kim Kardashian, actually raised $120 million in 2023 alone. Kim effectively used this strategy to grow her brand into a multi-billion-dollar empire by leveraging strategic partnerships, outside investments, and business models that maximize her reach without requiring her to fully fund operations herself. So why is other people's money OPM principle so crucial for you to understand? Because once you grasp this hack, you can apply to your real estate business and scale into a billion-dollar empire, generating millions or even billions. What we see with many general partners is that you're trying to raise money from family, friends, and colleagues, and we get it. It's low-hanging fruit, and technically it's still OPM, other people's money. But here's the truth. That's not enough to scale your real estate business. To leverage other people's money, you have to, number one, sharpen your buy box. What this means is that if your investors are already drawn to Class A properties, don't waste time on major fixer-uppers or C-class assets. Accredited investors aren't looking to get rich overnight. They already trust that A-class assets can deliver those goals. Trust me, raising money becomes so much easier when your investors already believe in the asset class that you're offering, instead of trying to fit a square peg into a round hole. Number two, leverage the power of influence. Dan Seller famously said, it's about who, not how. Well, we say it's about who knows you, not just who you know. That's exactly why our investors place millions with us. They know, like, and trust us so much that many of them are so excited to jump in. We often have to remind them, calm down, cool off. Hey, you can't wire us any funds yet. You need to wait and go through the investment opportunity webinar, get the full details, and then decide if this investment opportunity is right for you. Now that you know the tribal marketing theory, disruptive innovation blueprint, and OPM, other people's money principle, I'm going to break down exactly how you can build serious wealth using other people's money. See you there in a few seconds.